Hey guys, Scott here. We're doing the system building course launch and I'm trading live in just a few minutes. We've got 5 minutes to go, so everyone just hang tight. I'm a bit nervous, but hey, we'll see what happens. I haven't checked the markets yet today. It's 6 a.m. here in Bangkok, and yeah, everything looks good so far. Okay, let me just check with my guy that it's all working. And you see me. Thank you, Doug. The best. Okay, it says I'm broadcasting. Hey guys, can anyone see me? All right, guys, just another couple of minutes before we get started here. I'll be trading live in just a minute. I'll be showing you the Thor trend following system for the first time, and I'll be showing you the system building masterclass as well. Okay, we're just waiting 3 minutes or so until the start time, and we might wait 1 or 2 more minutes to see who else logs in. Okay, we'll be here in a couple of minutes. Okay. All right, hopefully this switches on. All right, guys, just waiting for the last couple of people to join in. we have 12 people online. There should be a few more than that. There's 200 people registered. So see how we go. Okay, let's have a look. Okay, we're just waiting a couple of minutes. Okay, we're just waiting for the last couple of people to come in, and there's some technical thing that Daniel is fixing. So as soon as we get that done, we're ready to go. Very shortly kicking off here, guys, very shortly. Okay, just waiting for Daniel to fix this. All right, we'll be kicking off in just a minute. Okay, just trying to get okay, I'll get my screen all sorted. And we're just going to be a couple of minutes. Okay, this we have some technical problem. The video. Okay, guys, we're 3 minutes past the hour now. Okay, let's see if it works now. Okay, finally, we have it working. Okay, let's see if it works now. Okay, everyone can see me now. That's good. Okay. I think we're ready to start. Is everyone ready? Can you just let me know that you're ready in the chat? Everyone let me know that you can see me. All righty then. Let's kick it off. Okay, now let me just find my thing, and I will share my screen. Screen share. All right, guys, my name is Scott Phillips, and most of you know me. And today we're going to be doing the High Performance System Trading webinar, which Daniel and I developed. And yeah, let's get to it. So what you're going to learn today, and what I want you to see, is how different system trading is from the trading that you've probably done so far. And what I really want you to see today is that you can take the confusion, you can take the fear, you can take the stress, and you can take the inconsistency out of your trading. And it's going to take you a lot less time at your screen when you trade this way. And you don't need to learn new technical analysis methods. You don't have to, start learning a new thing. So I'll be demonstrating my Thor trend following system live in front of you. And that won't take too long because it's a pretty easy system. And you'll get the first look at my system building masterclass. Okay, so this marketing guy that I know that's been telling me I should do this tells me I need to give you what he calls an ethical bribe. And, well, sorry. And if you stay to the end of the webinar, I'm going to give you a PDF document, and it's going to have the exact entry rules that we talk about today, so you don't have to take notes, and a detailed discussion of how you can adapt this type of setup in your own systems, how you can build systems around the setup, how you can modify it, basically everything that I know about this setup, which is quite a lot. Also, you get a series of videos of me executing the system every day over consecutive days, so you can see that, okay, I took this trade 3 days ago and the trade has worked, it hasn't worked. You can see how I adjust the stops. So you should be able to put it together with 4 or 5 days of watching me do this live. And I'll also give you the spreadsheet that I've got here with screen captures of all the trades that I take, so you can go through my trades one at a time and see exactly what I'm doing, where I'm getting in, where I'm getting out, how everything works. Okay, everyone tells me I speak really quickly, and that's probably true, but I don't want you to miss details. So please switch off your phones, shut down your Facebook and your Skype and anything else that's going to be a distraction right now. Okay, so who is Scott Phillips? Well, most of you know me by now, but I'm a trader and I'm not a trading educator, and I really hate those guys, and that's most of my motivation for doing this, actually. So most of you know me from the Price Action Masterclass or from my emails, but what you might not know is that you get these emails every day with me talking about what I think the market's probably going to do or not do, but that's all just a hobby for me. That's just an interest. That does not affect my trading in any way, shape, or form. In fact, I don't like to use that stuff to affect my trading, because in the long term it's not helpful. So I'm a fully systematic trader, primarily in the futures markets, but I also do a little bit in stock, a little bit in FX, and a little bit more in crypto these days. And I take about 500 trades in a normal year across 3 core systems, and there's a couple of other minor systems that I run as well. So most traders, the way it works is that you lose a bit of money, you find a mentor that will take you on, and then you learn whatever he does, and you get to specialize in whatever sort of systems they build. So I'm kind of fortunate. I've been exposed to some different mentors, and I've been exposed to many different system types. So I've been exposed to discretionary systems with Van Tharp, mechanical systems with Ivan Krasten's. I've been involved with trend following systems with Sikota. I've done mean reversion systems with Ernie Chan, and some of I've been fortunate to learn off some really great traders, and the way I learned off these guys was mostly just by paying them a lot of money, and which was annoying. But the people that I've learned from, a short list, were Ivan Krasten's, who I know some of you already know, Linda Raschke, who's a market wizard. She's a fantastic short-term trader. Al Brooks has been really helpful to me personally and enormously influential. Van Tharp is probably the best discretionary system trader guy in the world. He's from the Market Wizard books, as is Ed Sikota, who's probably been the biggest influence of anyone here. He's a legendary trend follower guy. This amazing record with tens of thousands of % returns. Ken Long and Gabriel Grammatidis, 2 discretionary system traders that have helped me quite a lot. Michael Merle, who you might know as Mole from Evil Speculator. I know many of you know Mole. He's a good friend of mine. And there's a great hedge fund trader called Laurent Bernoux, a French guy who's also been enormously helpful to me, and he showed me all about adaptive position sizing, which is in the system building course, and it's amazing stuff. It just revolutionizes risk control and systematic trading. So I've been doing this full time since 2007, and I was preparing for it for a year before that, and I've done some stuff right and I've done some stuff wrong. But the stuff I discovered along the way, you get to cheat and just discover the easy way. So today, if there's one thing that I want today, it's to correct a fundamental misconception that a lot of us have. So most of us start in trading by learning some technical analysis or some fundamental analysis, and we find a chart we like and we place the trade. And it seems easy before you do it, but this type of trading where you learn some technical analysis, you find a chart you like, you think that looks good, I'm going to buy that. And that sort of freewheeling, shoot from the hip style of trading, it's the hardest trading that you can possibly do. Like, it's the domain of authentic experts. And personally, when I try to trade that way, I can get it right sometimes, but I can't get it right all the time. And when it stops working right for me, it goes very bad very quickly. So the fundamental misconception is that the way that we all start trading is the easiest way. It's actually the hardest way of trading. So why do we try the hardest thing before the easier way while we're still beginners? So today I'd like to show you an easier way. So the big secret for today is that system trading isn't just more profitable, it's actually heaps easier. And the second thing that really amazed me when I found it out is that getting better and better at technical analysis, it's not going to make you consistently profitable. And how I figured this out was I was with Van Tharp Super Trader Group, and we're all in Berlin together, of all places. And I'm listening to these guys talk about the way they interpret price action. They really didn't know that much. Like, they were talking in phrases that better people at reading the price wouldn't use. They were saying things like, it has to recapture the 50 EMA, or it's and that anyone who knows anything knows that's not really true. And so there were these guys who didn't really know what they were doing that well beyond an intermediate level with technical analysis, and yet these guys were just crushing it. They were all doing at least 100%, and some of them were doing 200%. And none of these guys were that good at technical analysis. And it sort of occurred to me that, well, every one of these guys is doing over 100% a year, and none of them are that good at technical analysis. So my idea was that I just keep getting better and better at reading charts, and that would somehow magically translate into trading profit. And so what it turns out is that I was on a road. I'm trying to get from the place I'm a beginner trader to the destination I'm making heaps of money. And the road that I was on was the getting better and better at chart reading road. The road I was on didn't take me to the destination that I want to go. So logically, what I have to do is change the road I'm on. So I changed the road I'm on from the getting better at charts road to learning about systems road. And it kicked off an obsession that was very profitable for me, and it's been enormously enjoyable. And I'm going to share it all with you today. So the last thing that I want to make clear is that we spend a lot of time talking about trading psychology, and some of that is just crying over mistakes that we've made, the times that we didn't trade with a stop, or we got stuck in a trade. So the point that I want to make is that trading psychology problems, probably 90% of them are just going to disappear like magic when you trade with the system. Some of you have seen the video of me trading when I'm in hospital and I'm nearly dying, and I was literally a day away from dying, and I can still execute my systems. And I didn't have good trading psychology that day. I could barely see straight in front of me. I had 4% kidney function. But the trading psychology problems really disappear when you trade with the system, and it's huge. Okay, so this is me before, except that I would never be able to get a job at a bank like these guys. But I was constantly stressed out. I was always worried about what the stock market was going to do tomorrow, or the currency markets were going to do tomorrow. And I used to spend a lot of time researching news and opinions. I used to hang out on Seeking Alpha, and I used to read a lot of the financial press, and I'd secretly hope for market crashes. I'd subscribe to this Robert Prechter's Elliott Wave newsletter, and every day they'd tell you that a crash is about to come, and you'd get a third of a third wave down, and you know, you're going to need high ground and permanent water, and chaos will reign. And it took me years to realize that was a scam. So this was me before I traded with a system. I was just, you know, very stressed, and trading was not a very enjoyable experience, to be honest. It was just kind of a shit go, as we say in Australia. So after this is me on the side, you know, I really don't care. I don't give a fuck what the stock market does. It's going to go up or down. It's going to be unchanged. I'm demonstrating my stuff live to you today, but I haven't even checked the market yet today. So my job, I've reframed my job from trying to predict the future, which is a very difficult thing, to just to follow my trading rules. And I'm not going to worry about the things that I can't control. And the biggest thing that I can't control is the stock market or the currency market. I can't control any of that. What I can control is my reaction to that. Okay, so stressful feedback loops and trading stress, this happens when, as a direct result of worrying about things that you cannot change. So if you've ever had the experience of worrying about things that might happen in the future, you worry, you chew on it and you chew on it and chew on it, and then it's going to happen anyway, or it's not going to happen anyway. And my experience is that the things that we thought were the worst things in the world, in 10 years later, you can't even remember them. You know, so most trading psychology problems aren't really trading psychology problems at all. And most trading psychology problems can actually be fixed with better trading procedure and better trading spreadsheets, actually, which I'm going to show you today. So I'm demonstrating a trend following system today. And why am I doing trend following? Well, one of the big reasons for it is there's pros and cons to trend following, like everything else, but we're absolutely certain it's an edge. It's a fundamental thing in human nature that we like to buy things that are going up, and that is trend following. You know, if you've ever had that experience of being involved in a property boom and it seems like everyone around you is flipping houses, that's trend following. That's people getting excited when they're making money, or like Bitcoin a couple of months ago. People getting excited when they're making money and people buying more of it and it causing it to go up. So we're absolutely certain that trend following is an edge. There's hundreds of billions of dollars of institutional money trading exactly like this, and there's only a few ways to do trend following. The edge in trends is not going to be easily arbitraged away, unlike a lot of the quant strategies that we have today. So it's been a consistent edge for over 200 years. It'll probably still be standing in 200 years' time. And right now, I want to introduce the Thor trend following setup. So it's one of 3 production systems I run. The others are a short squeeze system and mean reversion system. It's 95% mechanical, 5% discretion. I'll discuss this in the PDF. So the discretion is very, very minor, and we're going to go through the types of discretion. But essentially, and Ed Seykota put me onto this, he's one of the greatest mechanical traders of all time, but he liked to have a tiny bit of discretion in him just to stop him going crazy. And what he found is that over 30 years, his discretion didn't make him any money and it didn't lose him any money, but it kept him sane. So just having the feeling that it's a system, not a suicide pact, that you don't have to take a trade that's an obvious loser, it saves your sanity. So I've been trading this with my own account successfully since 2014, and I collaborated it with Michael, who goes by the name of Mole, and he runs a blog called evilspeculator.com, which some of you have seen. It's a really cool community, and he automated it, and having tried it fully automated, I prefer to trade it manually. And why do I prefer to trade it manually? You're going to see why, because you've got a few decisions to make. If, for example, if you get a setup in gold and silver at the same time, which do you take? And the other reason I prefer to take it manually is that I'm a very low-level programmer. I program like a high school kid, and when I ran it automated, I'd have to constantly be checking, are the data feeds working? Is everything right? Is everything working properly? Are the orders in? It actually took me much longer than doing it this way. And that's true of most people can trade quicker with a system than they can with a fully automated system, because we have this idea that automation is just going to fix all our problems. You're just going to hit start and sit by the pool, and it's just going to make you money like an ATM. And the reality is that auto trading is actually harder work than mechanical system trading. And I prefer mechanical for the simple reason that I'm never going to be a world-class programmer. I'm always going to kind of suck at it. But I am a world-class system trader. So I prefer, as a matter of preference, to do something really well. I just feel better about myself. I don't make any mistakes, and you make mistakes in auto trading too. You know, it can be a very frustrating way to trade. So the Thor system, it's like all trend following systems. It's very non-correlated with equities. So it worked very well in 2008 and 2001. I wasn't trading it then, but I backtested it through then. And the way it works, like all trend following, it tends to have 2 or 3 super performance periods, and those last between 3 or 6 weeks. And we just come out of one now, and you'll see, for you might paint 7 or 8 or 10 winners in a row, make a lot of money, and then you chop around for a few months, just barely go up, barely go down, and then in another 3 or 4 months you get another super performance period. So the system itself takes between 10 and 30 minutes to execute per day. The discretion is very limited, so you can't just decide, I like a trade, I like bonds, and I'm going to do this. So the discretion is very limited category. So one of the categories is that it's almost a setup, and it's still within the spirit of the system, but it's like a tick or two off the exact definitions. So we're looking for a hammer candle, for example. It might be a nearly hammer. The other type of discretion that we give ourselves permission is that one of the things we know about trends is that when volatility increases at the end of a trend, that's generally the final fling of a trend. So when we see evidence of that, we give ourselves permission to skip if we want. So how do we handle discretion? You have to keep track of it. And so what we have is, I'll show you shortly, is in the spreadsheet, we have a discretion tab on the sheet, and we check once a month to see how it went. So if our discretion is negative this month, the next month we can't use any. So in order for us to keep giving ourselves the permission to pick and choose trades in very limited circumstances, we have to be able to prove to ourselves that that's actually a good idea. So if my discretion for January makes money, I'm okay to use discretion again in February. If my discretion for February loses money, I'm back to pure mechanical for a month. So in this way, we've got a little bit of freedom, but it's really just the illusion of freedom. It's just enough to stop our psyche from feeling boxed in. Okay, so why am I giving this away for free today? And there's a heap of reasons, but one of the most common things that people tell me is they don't think they can come up with an idea for an entry setup, which is, and a lot of you are here now because you want to get the rules of my entry setup. So there's an easy fix. If you're not creative enough to come up with an idea, you can use mine, or maybe take mine and then riff on that, or modify it to suit yourselves. And when we're going through, I'll talk about some ways that you could possibly modify it to suit the technical analysis that suits you. So personally, I've gotten huge benefits from sharing my trading methods and results. So what happened for me was I started off blogging with Mole at evilspeculator.com. And then through sharing what I know, all the people, some of the better traders over there got in touch with me and wanted to share me their systems and their setups, and I shared mine, and we collaborated, and it started out for me that Mole programmed like 6,000 lines of code to automate all my stuff for free. And then he traded it for his clients, still being traded for client money now. And then we went on and developed other systems together and other systems separately. And along the way, I would find all these great people who'd want to collaborate with me because they saw I was a serious guy and because I shared all my stuff. So for me, my experience is that since I started sharing everything that I know, I've gotten more back from it than I've given away. So I've gotten hedge funds and institutional guys, and I'm involved in a group of very serious professional hedge fund and HFT traders, and we talk every day. And I never would have gotten any of that if I was hoarding my knowledge and trying to keep it all for myself. So what I believe is that knowledge grows when you share, and that's my belief, and it's why I do it. And as a result, the caliber of people that I collaborate with these days, I've got hedge fund and investment bank traders, HFT programmers, PhD economists, and really high level people, much better than me, and this came from sharing knowledge and not hoarding it. And it's a strategy that's worked, and I'm not going to stop. So personally, I absolutely hate with a passion all of the trading educator industry, and it really rings my bell to give away better stuff than they charge for. Even the guys who are legit you can tell when they're trading educator type guys that you can tell there's a difference between traders and trading educators. So personally, I wasted years on baseless theories and dead ends and scam mentors and newsletters and predictions and stock tippers and all that bullshit that just didn't work. So I would like to save other people the suffering that I experienced. And I remember looking at doing my taxes one year and looking that I'd paid Elliott Wave Theory and Robert Prechter $1,000 in newsletters and books and stuff like that. I nearly cried. It's like I gave $1,000 to these pure fraudulent guys. And the last reason that I'm doing this is it doesn't cost me anything to share. It's like it's like me owning the Mona Lisa and then you taking a photo of the Mona Lisa. I've still got the Mona Lisa. It doesn't cost me anything to share. And maybe if we were talking about some super quant Rentech type edge that would easily be arbitraged away, maybe I wouldn't keep that. I wouldn't share that. But the things that I share are things that are almost impossible to arbitrage away. You know what? Mean reversion is still going to exist in 200 years. Trend following is still going to exist. The fundamental nature of price action is going to stay the same. So it doesn't hurt me at all, and it benefits other people. And my experience of life is that selfish actions are the cause of my unhappiness, and selfless actions tend to be the cause of my happiness. So I'm going to look at how traditional trend following is modified to be Thor trend following. So traditional trend following, some of you might not know, it has a very low win rate, usually between 25 and 35%, and has a very high drawdowns. So the drawdowns can be up to 60%, and the drawdowns can last a while. Like traditional trend following has been in drawdown for 4 years now. So personally, for me to trade this every day and get up out of bed at 4 in the morning or 5 in the morning to get up every day, I wanted to set up with a higher win rate. I wanted to tweak this up to 50%, and I wanted the drawdowns to be smaller, and I wanted the drawdowns to not last as long. So when you want to increase the win rate on any concept, you need to be very, very specific. And this is a key concept about improving your systems, is that you can get very specific and like things hopefully will behave alike. So how did I design this setup? So the traditional trend following is a trend filter plus buying a breakout. So usually they have some method of saying, is it an uptrend or a downtrend? If it's an uptrend and it gets a breakout, you'll buy it. If it's a downtrend and it gets a breakout, you short it. That's traditional trend following. It has a win rate of around 30%. The other way that is commonly done with trend following is to have the trend filter and a breakout, then a pullback. So because you're reducing your risk by buying the pullback, the win rate goes up to about 40%. But that still wasn't enough for me. I wanted to do better than 40%. So what I did to tweak this is Thor is a trend filter. So we're only going long in uptrends. We're only going short in downtrends. Then we've got a pullback. And then we've got a price pattern which confirms that the pullback is over. So this is key. So by putting these three elements together, we tweak it up to win rate. And with only three elements, it's not quite curve fitting yet. If we put 4 or 5, it would start to be a little bit curve fitty, but 3 is okay. Okay, so how do we set up your charts? We're going to have 3 things. We're going to have an exponential moving average 8, 21, and we're going to have Bollinger Bands, the standard parameters 2 and 20. Now, these moving averages of 8 and 21 don't mean anything. The only reason I use them is because I tested a couple of things. These were okay, and I was already using the 8 and the 21 in a system I was trading at the time. So when you're doing any sort of system design, you want to steer way the hell away from any sort of perfect optimization for parameters. What you're looking for is a decent number in a forest of decent numbers. So I'm using the 8 and the 21. If the 10 and the 25 were better, would I switch? No, I'm trying to get a decent number, a decent representative number. I'm not trying to optimize for the perfect number, because if you optimize for the perfect number in the past, by definition, the perfect number in the past is not the same as the perfect number for the future. Okay, so how are we using these EMAs? I don't believe that EMAs have any predictive value whatsoever. I don't believe they mean a damn thing, but we're using them as a trend filter. And you'll see it in a moment that when the EMA 8 is above the EMA 21, we're going to take long trades only. And when the EMA 8 is below the EMA 21, we're going to take short trades only. So this is an example. So the EMA 8 is the blue line, and the EMA 21 is the purple one. So when the blue is below the purple, we're only taking short trades, okay? And on the right-hand side, you can see that the EMA 8 is the blue and the EMA 21 is the purple. From here all the way up, we're only looking for long trades. So let's look at this again. And yeah, I know moving averages are lagging, but if you look at how much they lag, you know, the lag starts about here and the lag starts about here. We're still getting at least 80, probably 85% of the price action is correctly classified here. So could you come up with a better trend filter than two stupid EMAs? Of course you could. Is it going to make an appreciable difference to the results of the system? No, it's not. It's not going to make hardly any difference at all. Like 95% of the time, it's going to be exactly the same. And you have to remember that we're executing this manually. So simple that you can't make mistakes is a lot better than complicated that you can make mistakes, because each mistake is going to cost you. It's going to cost you big time. Okay, so let's look at that one more time because it's key. So inside this box, when the blue line is below the purple line, we're only taking short trades. In this other box, the blue line is above the purple line, we're only taking long trades. Okay, has everyone got that? Because that's pretty critical. All right. Okay, so we're looking for, number one, we're looking for the trend filter. So when the EMA 8 is above the EMA 21, then we're looking for a pullback that touches either or both of the EMAs. And then we're looking for a price pattern that tells us that the pullback is probably finished. And that pullback, that price pattern that we're looking for in this instance is a hammer candle, hence the name Thor, because it has a hammer. So if we look at here, what we're looking for is that on the left-hand side of the chart, we've got the blue EMA above the purple, so we're only looking for long setups. Then we're looking for a hammer candle which touches the EMA. That's a long setup. See here we have a hammer candle that's touching the EMA. Now the definition of a hammer candle is the same one that we always use. So it's lower wick. This lower wick has to be equal to or greater than 2 times the real body, which is the size of this or the size of this. And it has to close in the upper half of the range. And you can see, even though this is a down candle, it's still clearly in the upper half of the range. So both of these are hammer candles. So on the left-hand side of the chart, we're looking for long setups. And on the right-hand side of the chart, after we get this crossover, we're looking for short setups. Now, the short setup is the inverse of the hammer, which we call a shooting star. So you've all seen this before if you've seen my videos. So there's nothing revolutionary about it. We have the blue EMA below the purple EMA, so we're looking for shooting star candles in a downtrend. We sell short here, and you can see it goes down. We sell short here and see it goes down. Okay, everyone got that clear? All right, I hope it's clear, because you're going to have to help me with this trading in a minute. So you're going to get the exact rules in the PDF. So right now, it's only important to grasp the concept. You get the full rules at the end anyway. And the important thing is that we're trying to take only long trades in up moves and follow the trend. So we're looking for a pullback and then a hammer candle. And what is the hammer candle? The hammer candle represents a failed attempt to drive the market down. So the hammer candle can look like this, it can look like this, it can look a few other ways. But if you think about what happened in this bar, it started here, tried to go down, couldn't, and then closed up high. So that's the market trying and failing to go down. And here, tries to go down, fails, and goes up. So if we've got a pullback and then we have this at the end of the pullback, what it's telling us is that there's a pretty decent chance that pullback is over, right? Everyone got that? It's like a pretty decent chance that the pullback is over. Okay, the upside down hammer is called a shooting star candle, and this is the short setup. So the hammer candle exact rules are the lower wick equal to or greater than 2 times the real body, and close in the upper half of the range. Shooting star, which is this upside down, is the upper wick has to be 2 times at least the real body, and a close in the lower half of the range. Okay, so once again, we're going to use the trend filter, the EMA 8 above the EMA 21, and then a pullback that touches either or both of those moving averages, and then a hammer candle. 3 things. So how do we stop ourselves from taking trades when the market's not trending? Because one of the great tragedies of trend following is that the trends don't happen for very long and they don't happen very often. And statistically, trends make 87% of the price move in 11% of the time. So you can be waiting for a trend and it shoots off. We've all had this experience of thinking that a market is going to go and then the bus leaves without us, and it can be quite frustrating. So when the Bollinger Band is flat or falling, and I'll show you what this means in a minute, we must have 1.2R to the upper Bollinger, and if not, we skip the trade. So when I did my market beliefs to design the system, what I found in my market beliefs is that I thought that Bollinger Bands were when they were turned down were an indicator of a sideways market. So I would have said that this price action here, where the Bollinger is turning down, is an indicator that a market is potentially changing course or potentially being a changing trading range or reversing. So this, to me, you can't quite see it because I've drawn the line too fat, but it curves down like this. So when the upper Bollinger Band has curved down, we need to have 1.2R. Now, R is the distance between our entry point and our stop loss, which is this much. And so if we make 1.2 times that and we get to here, we've got a 50-50 win rate. So if our wins are at least 1.2 times our losses, then we've still got an edge. So the idea is that even if this isn't a trend, like this isn't a trend that ran away forever. In fact, this is a trend that just ended. So we're getting on like 4 bars before the trend is over, and we've still got a winning trade. So what this does is, if this was much closer, if this Bollinger Band was down here and we didn't have enough distance, we would skip that trade, because we don't make money by predicting price in the future. We make money by having the risk rewards odds in our favor. So if we're going to risk $1,000 to make $500 and we've got a 50% win rate, that's just a sucker bet. If we've got a 50% win rate here, we're risking 1,000 to make about 1,500. That's a decent bet. You know, it just is. So this is critical to understand. We're going to skip any trade where the Bollinger is falling and we don't have 1.2R to it. And we also use that in the exit algo. So here we have 3 elements. We have the EMA filter is bullish. The blue line is above the purple line. We have this bad boy, which is a hammer candle, and it's touching the EMA. And the upper Bollinger is rising like this, so we don't have to worry about checking if there's 1.2R. So how do we trade this? We enter on a break of the candle high, and usually we do this with a stop order, so we don't have to physically be present. So what we do is we place this order, and then we walk away. And if the order gets filled, the stop loss gets put in, the targets get put in, it's all done for us, so that we can set and forget. So once this order is placed, it's every bit as good as a fully automated system, even though you're not an automated trader. Okay, so here we have the reverse setup. So we have a downtrend. It's an obvious downtrend, right? And you can see there's another setup here and a setup here. But let's look at this one. So we have the blue EMA, the 8 is below the 21, so we're only looking for short trades. Then we're looking for a shooting star candle like this one or like this one. If I wanted to use some discretion, I would say this one is still within the spirit of it. This one here, see how it's just a couple of ticks off, but it's still in the spirit of it. That one would be not bad too, if you wanted to use some discretion. But this one is bang on in the dead set, middle of the rule set. So it's a shooting star candle. It's touching the EMAs. We go short on a break of here, and our stop loss is at the bar high. And I use at the bar high and not one tick above for a bunch of complicated reasons. But it slightly improves the performance of your systems by about 2%. So anyway, so we're going short here and following this trend all the way to the beach. Everyone got that? Okay, so how do I check the markets every day? What do I do? What is my trading day? I do things in a logical order. So I check which trades I currently have open, and I make a note if anything has to be changed. And I check the markets in the same order every day in logically grouped workspaces. So my workspaces are indexes, energy, bonds. I have the soybean complex. I have that mixed in with the corn and wheat. Then I have the metals, platinum, palladium, silver, copper, and then I have the currencies. I only trade the major currencies because of correlation issues, and I leave the currencies to last because it can be the most difficult, because it's quite common to get, if you get a setup in one of the currencies, you can get a setup in 3 or 4 of the currencies, and you have to pick the best one, which can be kind of complicated. So, pro tip: if there's one thing that's going to improve your trading out of sight, instead of worrying about whether 30 different markets are going to be up or down tomorrow, that's a very complicated thing to worry about, and it gives your mind a lot to chew on, and your mind will chew on that endlessly like a dog with a bone. So my job is, I only have one job. So my job is to look at every chart and say, is there a setup, yes or no? That's my job. So a couple of months ago, I binge watched The Sopranos again, and there was a scene in it where this guy Christopher, he joins the mob, and he becomes a maid guy, and his new boss, Paulie, he's this mean-looking old guy, and he tells him that you've got no problems in life except that you have to kick up 10% to me every week, and he kicks up his 10%. And what he says is, when you think of all the headaches most people go through in life, ours is all boiled down to one headache, and it's not a bad deal. And he's actually completely right. This mean-looking guy here is right, that when you only have one thing to worry about, have you got a setup, yes or no? Have you got a setup, yes or no? Life is easier. And now some of us are magnetically attracted to a complicated life. You got to know exactly what's happening next, and you've got to know exactly what the stock market's going to do or the currency market's going to do, and you're going to make your best guess and you're going to make predictions. But that is a very difficult way to go through life. It's almost self-sabotage. Okay, so we just have a question in the chat about what timeframes are we using. I'm using daily timeframes, and why am I using daily timeframes? I'm using daily timeframes firstly because the edge in almost any system is slightly better on daily timeframes, and that's just a fact because more people use daily charts than they use any other type of charts. Daily charts are actually better than weekly and monthly charts. Okay, and the other reason is because I have a life. I didn't start trading so that I could spend 14 hours a day at the screen, even though I used to do that. My trading day, you're going to see it in a couple of minutes. I'm over and done with by 7:30 in the morning. I go to the gym. After the gym, I go eat some bacon and eggs. I have a swim. I have a nice lunch with my wife. I have a nap in the afternoon. I hang with my kitty. So when you trade on daily charts, you can get the whole thing over, walk out the door, switch your monitors off, and it's all running on autopilot. So for me, a lifestyle-wise, daily charts are better. And Wehan asks, have you guys run stats on different R other than 1.2? I've run stats on 1R, and 1R is bad, and I haven't run stats on anything other than 1R, but as a general rule, moving any stop to break even reduces system performance. Now, if you're running fully automated, you would probably choose not to move your stop to break even, but when you're trading mechanically, one of the most frustrating things that can happen to you is that when a trade makes money and then pulls back and then loses you money. So by moving your stop to break even, you save yourself a little bit of psychological pain. And even if it's adversely affecting your system performance, for your sanity's sake, it's just better to have 3 break-even trades in a row. And you'll see that I had 3 break-even trades earlier this month, last month, but that's a lot different than 3 losing trades. Okay, and we have a question, does Thor work on 5-minute charts? It does, but you have to be, it only works in trending phases of the market on 5-minute charts. If you have to be very clear that the market is trending. Okay, so I choose not to judge myself by how much money I made today. So instead, I judge my performance by 2 things. And those 2 things are, did I execute today mistake-free? That's the one thing. Did I execute today mistake-free? My job's done, clock off, go have a snack. So in the long term, how do I judge my own performance? For me, the benchmark of professional trading is a professional trader will make average less than 1 mistake in 20 trades. So my real question is, am I averaging less than one mistake in 20 trades? If I'm doing more than one mistake in 20 trades, I need to either trade less markets so that I'm less confused, or I need to lower my position size because I'm fucking up. Okay, so there's this quote from a Greek poet called Archilochus. I probably pronounced it wrong, but he's talking about the parable of the fox and the hedgehog. So the fox knows many things. He's a really clever guy, but the hedgehog knows only one big thing. So I read this book a while ago. It's called Thinking Fast and Slow, and I recommend it for traders. It's so this guy Kahneman, who wrote the book, he studied the outcomes of expert predictions. These guys who really were legitimate experts, and the more confident the expert was about his prediction, the less accurate they were compared to random guessing. And so years ago, I kept this trade diary and I rated my confidence in my trades from 1 to 10. So a 9 or a 10 was a trade that I thought was an absolute lock, cannot lose. So I experienced the same thing when I kept a diary, and out of 89 trades I have in the journal, every single time I thought a trade was a 9 out of 10 or 10 out of 10 trade, it lost. So the stronger my confidence in my prediction, the worse it was. So what happens when we approach trading from the point of I'm going to go through charts and find the ones that I like the best? The charts that you like the best are the ones that you have the most confidence in, but paradoxically, the trades that you have the most confidence in are the ones that are going to fuck you. And it's incredibly frustrating because you see this perfect looking chart pattern. So Simone, I'll show you my real results in a few minutes when we get to the spreadsheets. But right now it's outperforming. It's performing better than it should be. So that will pull back. On average, this system performs about 0.21 expectancy on futures and 0.25 expectancy on currencies. Okay, so in this other book called Good to Great, it's talking about great leaders, and this guy who wrote the book, he stated that all good to great leaders are hedgehogs. So a hedgehog is a person who just knows one thing, and they know how to simplify a complex world into a single unifying idea. And I like this. So for me, instead of having 100 problems, and I'm trading 30 different markets, and I have to work out how the interest rates rising is going to affect the stock market and how that's going to play into is that going to start a US dollar short squeeze, and instead of worrying about all of that, I only have one thing. Do I have a setup? And Prakash, yes, I've tested it for commodities like crude oil, natural gas. Those are the commodities we trade every day, and you'll see the results shortly. So, which do you think is easier? So, on one hand, you can be trying to predict what the stock, the bond, the futures, what the FX markets do every single day. And don't forget, you don't have to just do this today. You have to do this from now until forever, so until you're old. Or you can just follow a simple set of rules and don't make any mistakes. Now, honestly, I think my way is dramatically easier. Okay, there's a question from Robert about, is it a better edge with ETF? When you trade, an ETF is a derivative. So anytime you're trading with a derivative, you really ought to do your charting off the original. So if you're trading a derivative of currencies like the currency futures, like I trade, I do my charting off the FX. So if you're trading a crude oil ETF, you're best off doing your charting off the crude oil, and the edge is almost exactly the same. Okay, so most losing traders pick and choose their trades. And this is true. And most winning traders trade with a system of some sort. Even the best discretionary traders use a system or a method. So it's really that simple. So losing traders pick and choose their trades, and winning traders use a system. So you've just got to decide which side you want. Are you on the side where most people lose, or you're on the side where most people win? Okay, so now I'm going to do my day's trading right in front of you, and I'm willing to bet the reality is different than what you're expecting. So it always reminds me of that meme. It's like what my friends think I do, what my mom thinks I do, what I think I do, and what I actually do. So let me show you what I actually do. Okay, so I'm using the world's crappiest, and I don't exaggerate there, trading setup. So what I've got is I've got a virtual machine, which is in America, and it's really slow. So if I click a button, see how nothing is happening? It's really, really slow. So we've got a tremendous lag on this. Okay, I just see some of these. Wrong. 618. Okay. So what I do is I check the markets looking for setups in the same order every day. So by doing stuff in the same order every day, I get this sort of rhythm and comfort with it. It becomes almost impossible to make a mistake. So what I do is I search for setups, and when I see one, I'm only looking at this right-hand side of the chart. I put a little arrow on, and you can see here I took his short trade here and it lost. So it's a big deal. Like I lose half the time. Okay, so first of all, I'm going to look at the E-mini futures, and what I'm looking for is the blue line is above the purple line, and I'm looking for a hammer candle in an uptrend. Now, that's not a hammer candle, so it can't possibly be a setup. So I don't need to look at it any further than that. So I'm done with that, right? The next one I'm going to look at is the YM, which is the Dow Jones futures. Is that a hammer candle? That's a downtrend. Is it a shooting star candle? It's clearly not. So I can just forget about that, move on. The NQ, the same thing. It's an uptrend. Is that a hammer candle? No, it's not. So I can move on. Natural gas. Is that a hammer candle? Clearly, it's not. Crude oil. This is a hammer candle, but it's a downtrend. So that cannot possibly be a setup. So my work is done for these. So I go to the next workspace, and you can see how slow this is. Workspace. Let's go down to bonds. And NinjaTrader is crappy for 100 different reasons. But, boy. Let me count the ways that NinjaTrader sucks. Okay, so let's look at ZN, which is the 10-year note. Is this a hammer candle in an uptrend? No, it's not. We can move to the next one. ZT. Is this a shooting star candle in a downtrend? No, it's not. In fact, it looks like it wants to go up. ZF. Same situation. ZB, that's not a setup. Okay, now, can everyone follow along? Are you guys getting this? Okay, can everyone just take one quick look at these setups and say, is there a setup in either of these? Because I think it's no, 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 and no. And David, a small group of instruments takes less trades and has less correlation issues. So a small group of instruments will outperform over the long term dramatically a larger group of instruments, especially risk adjusted. All right, so moving along, we've done bonds. Oh. Okay. We've done bonds. Now we're going to do the beans and the grains. All right, let's see what we've got here. So here, we talked before about the discretion was to skip a trade if you have an increased volatility at the end of a trend. Now, if we look at this trend, we have a long-running trend, and increase in volatility at the start of a trend is bullish, but at the end of a trend, we see these bigger candles. That starts to become bearish. So when we skip a trade, we mark it in our spreadsheet, and we mark it on the chart as well. So ordinarily we would be in this trade, but we've skipped this one, and that looks like it might be a good decision. Now, at this point, let me show you my trading spreadsheets, because you might all think that trading is done on charts, but 99% of trading is done on spreadsheets. Now, this is a nice opportunity to see into that. So let me show you how everything works. I'll just make it a little bigger so you can see. So up here we have a list of every trade we've taken for the year, and we have the R's that these trades have made. Screenshot for everyone. We have other tabs. I like to put a tab for mistakes and discretion together. So together, I haven't made any mistakes this year, which is good. Every time I use discretion, I took a trade in 6A, which is the Australian dollar futures, which was an almost hammer, which made 1.44R. So my discretion made me 1.44R. I skipped a trade in ZN, which made 1.2R and then reversed, so it didn't cost or make me anything. I've skipped 2 trades in ZF and ZC, which would still be open, so I put a question mark there. ZB and ZW, I skipped trades that saved a 1R loss. So my discretion for the year so far has made me 1.44, 2.44, 3.44R. Okay, I have a tab with open trades, and I just realized that there's one more that's not on that list. So I pay special attention when I check these markets, ZL, the Swiss franc, and the Mexican peso, how these are going. Okay. So let me show you some interesting stuff here. So for a start, I don't use fixed fractional position sizing on this system. So what we do is, because we run a number of different systems, it's terrible practice to just say, okay, you've got $1 million in the account and trade your account with 1% R values, trading 6 different systems with all for 1%, because you end up taking way more risk than you should. So we allocate a nominal equity at the start of the month, and usually at the end of the month we revisit. But what we notice here is, because we've got a lot of familiarity with Thor, we know that when Thor hits it out of the park and makes a lot of money, then it's probably going to chop around for a while. So you can see in January we had this amazing month where there should be a we had this amazing month. Okay, so one of the things I want to point out to you is that if you want your trading to get better, you need to build better spreadsheets. So what we have here, and you'll see it when I fill out the spreadsheet, is that when we put in a new trade, we put in what it is. So, you know, ZF is the 5-year bond, NQ is the NASDAQ future, ZW is wheat. We put in the month, a buy, sell, a percent, and the spreadsheet calculates for us. And it's got a little table with knowing that wheat is $12.50 a contract point. So all I have to put in is 2 cells. So I put in the entry and the stop loss, and the spreadsheet goes and calculates all of this. It tells me how many contracts I need to take, taking 7 contracts this one, how many ticks in my stop loss, and it tells me if I scroll over here, it tells me my exact targets, and the point where I go to break even is at 505, and it auto calculates all the statistics. So we can see for the year so far, 18 trades, 11 wins, 4 losses, and 3 break-evens. Now that's 61% so far this year. Now that's way better than we should be doing. We should be doing 50%. So I'll take that. But what I will do is notice that because it's doing far better than it should, I've got a punch in the face coming. And so I try and weather that punch in the face by not increasing equity. So we made the decision, you can see that we're using the same equity all the way through. Instead of fixed fractional position sizing, which is mathematically optimal, we've decided to leave it at 468,000. Simply because we knew that after a period like this, experience tells us that this is going to happen next. And we don't want to increase position sizing right when we know that we're probably a 70% chance of losing money the next month. So that's just one of those things that experience has given me, that after a good time, instead of becoming more confident, after a good time, I become very cautious. So one of the things you can take away from this is that any time that your systems are just crushing it, and you want to be thinking about winding up your exposure, you really want to be doing the opposite. And you really want to be checking yourself before you wreck yourself. So our average win here is 1.92R. Our average loss is 1.1R. So our profit factor is 1.9. That's a really healthy profit factor. And we've made 17% for the year, well, 17R for the year. Our expectancy is 0.95, which is about 5 times what it should be. So that will come back into line. So our standard deviation is 1.38. So that makes our system quality number of 2.92. If we go down here, we can see that our asset class, our bonds have been crushing it, our metals have been crushing it, our energies have been crushing it, and everything's been crushing it. Agriculture, So everything's looking pretty good from that. So the heart and soul of our trading is done on this. It's not done on the charts. So I put in today's values, and we're going to go back to the charts now. All right. I hope you can see how crappy NinjaTrader is, by the way, and I just would never recommend this at all. Okay. So we do not have a setup today in ZC, and we skipped the previous setup. We skipped this setup here, but we took this setup here. So we are currently long ZW. It looked pretty crappy yesterday, but you can see that our stop is at the low, which is 483, and I can check my trading spreadsheet to see where's my stop, and you'll see my stop, ISL, initial stop loss is 483. So everything's cool there. Now, did it hit the initial stop? Low, 483. So I have to check my trading platform. It came to the stop, didn't go one tick lower. So it should not have been stopped out, but it may have been. That requires a little check. Okay, next one. We do not have a hammer candle, so that cannot be a setup. That cannot be a setup. That cannot be a setup. Okay, everyone cool with this so far? Dave, how would you say NinjaTrader compares to MT4? NinjaTrader is a bucket of crap. That's all I can say. And I'll show you why. You move a window out of place like that, and there's no, they don't auto snap back. You have to like adjust them until you get it right. It's a very annoying piece of software. It does a couple of things that no other software does. So it does a couple of things. Okay, so let's move on to metals. We're almost done here. So look at gold first. Is that a shooting star candle? And I have a little indicator so that I don't have to get out my calculator, but this one is close. Candles. Actually, I'll do it a different way. Okay, so this one is a shooting star candle. The blue line is below the purple line. Now what we have to check, have we got 1.2R between the low, which is 1321.7 minus 1, which is 1321.6, and the lower Bollinger you can see is 1308.9. Okay, so I can tell that between this point and this point, we do have 1.2R, so we have a setup. So we're going to write that setup down in the spreadsheet. Gold, the month is 4, it's a sell. It's a shooting star. We're trading it for 1.1% of our nominal R value. And you can see it fills it in that gold is $10 a tick, and we're risking $3,666 on this trade. So what do we put in the spreadsheet? We put 13216. And we put in 13305. Okay. And you can see that it's telling us we're risking 89 ticks. We're taking 4 contracts. Our 1.2R is at 108 ticks away, and we see that all the values for the 1.2R and the other things we're going to need are in there. So can everyone see how having this spreadsheet it just makes things really easy? And For anyone who's getting the system building masterclass today, you have we're giving you this spreadsheet. We've shared this exact spreadsheet with the results, so you can go through my results, you can go through my exact trades, you can go through everything I've been through and walking through. And we've got versions of this for FX and versions of it for stocks. So having a strong spreadsheet game is going to revolutionize your trading. And Demir asked, what would you recommend for smaller accounts instead of futures? For small accounts, I generally recommend FX. You can find honest FX brokers. FX position sizing works good. CFDs are okay if you find an honest one, but there's only a handful that I can recommend. Okay. So moving on, we've got a setup in gold. We have a setup in palladium. So with June palladium, and you can see this is a shooting star in a downtrend. The lower band is 951.38, and then to the next one is 950.50. So the lower band is falling, so we don't have to worry about having 1.2R. So this is a setup too. So let me just enter it into the spreadsheet. PA 6 sell shooting star. Okay, so at sell point is 982.50. And our stop loss is 1002.1. Okay, so we're risking 392 ticks. Our size is 1.87. We're trading futures contracts, so we would round 1.87 up to 2 contracts, and we would round 4.12 down, obviously. So the rest of this is all filled in. Now, platinum, that is not quite a shooting star because the real body is too big. So that is not a setup. Silver, same situation, not a setup. Now, copper, HG. This is a potential setup. It has to break the daily low, but we have to check, do we have a falling or rising lower Bollinger? So the lower Bollinger the day before is 3.0678. And here we have 3.0668. So this is a falling Bollinger, so we don't have to worry about 1.2R. So this is a setup too. So 3.1260 and 31920. Okay. So I'll bring this back here. HG is copper. We're taking in the 5th month. It's a sell. Shooting star. Okay, so here we have 2 contract size. We have 132 ticks. It's all going. So we can place these orders at the end once we're finished. We've still got a little bit to go. So we have 3 setups so far. Now, this particular setup in copper, it's not one that I like. It's probably not one that I think will work. But it's also, if you can see, it's open and it's going up. It's also very unlikely to actually fill. So only 60% or so of trades will actually fill. So what I do the next day, if that trade doesn't fill, is I change it to a green color, and then I go back and delete the row later. So I will place the order, and the order is going to be to go short if it reaches below this line. Now, that's probably not going to happen, so I'm probably not going to get short. So tomorrow, I'm going to have this line of the spreadsheet, which I'm probably going to have to delete. Yeah, I'll just change that color back now to make my spreadsheet all nice. All right, so the last thing that we have to do is currencies. Okay, Euro US dollar, is that a hammer candle? No, it's not. Cannot be a setup. Aussie dollar. Is that a setup? No, it cannot be. Mexican, we are short from 2 days ago. I've got a question from UBS TPA. Daniel, can you answer that? Yes, and to answer Shane's question, yes, the entry needs to occur on the day following, because if the market doesn't have enough weakness to close below the daily low, or enough strength to close above the daily high, yes. And Fran, yes, we're going to worry about those correlations, and that's probably the biggest thing we have to do, which is why I haven't placed the orders yet. Correlations are the big kicker in this. Okay, so we have USD Mexican. Our stop loss is here. We're short here. It doesn't look particularly promising for this trade, but we're in it now. So we are. Is the dollar index? No, that is not a shooting star, so that cannot be a setup. USD JPY. This was a shooting star, but it did not have 1.2R to the lower Bollinger, so we skipped it. This one cannot be a setup, and that one cannot be a setup. So we have one open trade, and the rest cannot be a setup. So the conclusion of our day's work is we have 3 setups. Now we have to examine which of these 3 do we want to take. We've got 3 setups, all from the metals complex. Copper is not particularly correlated with the others, so we could probably take 2 of these maximum, or even 1. But personally, let's go back and look at them again, and we've got to decide which to take. So I would never take gold and silver together. Gold and palladium are quite correlated. You can see that the price action is roughly similar. They're both heading down, but palladium is just slightly smoother and just a more appealing setup, and the lower Bollinger is down. So I would take palladium over gold. So today, I'm going to mark that as green for not taking. We're going to place the orders for palladium. So we're going to sell short this, and we're going to sell short copper, even though that's unlikely to fill. Okay, so that's the day's work done, actually. And okay, so I have some questions. Now, is that what you thought it was going to be? Is that more complicated than you thought it would be? Did it take longer than you thought it would take? Bob, the column HTLK is which of 2 original systems was it? There's another system called Last Kiss, which I'm not showing today. Yeah. It's way simpler, right? Like this is definitely easier, and the advantages of this are manifold. So now this is done. We place the order, which takes about 2 minutes, which I'm not going to do today for because it's just going to take up unnecessary time. We know, yeah, we know which trade. So after seeing me trade, do you think you could execute that system yourselves? Like, do you think you could execute a system like this, or this one in particular? Because the exits I'll explain later, but it's kind of complicated, so we don't really have time to go through that. But you'll have a PDF. Okay, so can you understand how I could trade my systems from the ICU when my kidneys failed and when I was pretty much dying? Because it's simple. You know, I can't. If my systems were complicated, I couldn't trade them under stressful situations, under life-threatening situations. So how do you plan to run your trading business through life's ups and downs? So because life will have ups and downs. Okay, so what if I told you that this is the most difficult system I have to execute, and the others are much easier? We trade a short squeeze system and a mean reversion system as well, and a couple of other smaller systems that we trade with smaller money. But This system is the most complicated thing. So the systems, this would even be more complicated than what I would suggest that you go with. So one of the questions that everyone nearly wants to know is how much will I make trading with a system? And it's a pretty easy formula to work out. So on average, your expectancy per trade multiplied by the number of trades multiplied by your risk level. So if you take 200 trades a year, and there's about 200 trading days in a year, and you average 0.2 expectancy, which is reasonable but not amazing, it's pretty conservative, and you risk 1% per trade, which is also pretty conservative, then you'll make on average 40% per year, plus a little bit because compounding and using fixed fractional position sizing increases things a little bit. But one of the things you have to realize is that trend following is really lumpy. So you saw in my results for the year so far, we're killing it. You know, we're just crushing it. And that will not last. So experience tells me that the 61%, if we have a period of 61%, we're going to have a period of 40%. And it's going to come back to some sort of reasonable, this expectancy of 0.95 is going to come down to about 0.2. So that's just the way things work. When you have a good period in trend following, you're going to have a crappy period just after. Why? Because trends happen really quickly, and trending phases don't happen that long. So I want you to start thinking about how it would feel to achieve your financial goals through trading the markets, and to not just think about getting better and better at technical analysis, but start to think about how I can make this my living, how I can start to pull money out on a regular basis, how I can pay my bills, how I can build my wealth through trading the market instead of just getting better and better at reading charts. So let me ask you a question. How would your life change if you were trading like this instead of how you trade now? And for me, it's not really about the money. So for me, how my life changed when I started trading like this was that I stopped caring so much. I stopped Googling the news. I stopped reading the Financial Review newspaper. I stopped hanging out in online forums so much. I stopped really caring about anything other than you know what gives me a really wonderful feeling in the morning? I look at this and I go, ooh, everything's filled out. Oh, it's perfect. You know, a perfect spreadsheet gives me more satisfaction than a winning trade. So the ripples and eddies of how this changes your life to trade properly, they ripple so much further than just the money. So when I get into drawdown now, like we're in drawdown right now, I'm not bothered. Like we've had a few losing. Like let's look at the results recently. Let's get down in the weeds with them. So we started out strong: 3, 1.5, 1.37, 1.2, 1.4, 2, and 3. We've traded like 7 winning trades in a row and crushed it. You have to expect some losers after that. So we've got a loss, -1, up 2.1, up 1.92, up 2. And then we've got 3 break-even trades in a row. So it's clear to us that we're coming off the boil and we can expect some losses. And we've got 2 losses in a row, 3 losses in a row. Now a small win to take some of the edge off. But that's just the way it goes. You're going to have a period where it's going great, and then a period when it's going to suck. And you want to structure your trading rules so that in the period that things are going to suck, you're not going to get hurt too bad. So how would it feel to be in a drawdown and know that it was the system's job to pull you out of the drawdown and it wasn't all up to you? Because when I'm discretionary trading, what it feels like when I'm down 10% or so is, oh my God, this is all on me. I've got to do it. I've got to get my shit correct. I've got to paint some winners here. It's on me. And now it's not on me at all. I don't care. It's not my job to make money. It's the system's job. It's my job to execute the systems. And so what you get is this feeling that drawdowns are temporary, and that you get this feeling that drawdowns you're always going to recover from. And so you get this rock solid confidence that it doesn't matter if we have a losing trade. Why? So trend following, as a general rule, can be described as a scary horror movie that works out in the end. You know, the drawdowns aren't quite as bad with Thor as regular trend following. They're about half of Thor. But trend following works great, and then it sucks, and it works great, and then it sucks, and then in the end it makes a little bit of money. So how would your life change if you're trading like this instead of how you trade now? So let me ask you one more question. Do you need some help making this a reality? Would you like to work with me directly, and together we can implement this stuff that we talked about today? And I know it's a bit awkward, but I do have something to sell. I want to show you my system building masterclass. So if you guys want me to, I can show you now, or I can just go home and cry if none of you are interested. So is everyone interested in seeing the system building masterclass? Okay, wait for some response. No one's interested. All right. I'm gonna move ahead because I'm gonna do it anyway. All right, so I'm gonna introduce the system building masterclass to you now, and you're gonna learn every single aspect of building trading systems with an expert or experts holding your hand every step of the way. And I'm gonna work through the process of building a high performance system that suits you perfectly. Broken down, I'm gonna break it down into bite-sized chunks that anyone can do. So every single thing that I know about building trading systems is in this course. This is essentially my entire life's work, and it's distilled into bite-sized chunks. And it's a step-by-step process for conceiving, designing, optimizing, testing, and implementing a high expectancy trading system. So you don't need to be an expert at reading charts. You don't need to have a perfect trading psychology. You don't need to correctly interpret chart patterns. Lee Emphasis. Hey, Lee, how you going, man? You don't have to count waves, and that's lucky because that shit doesn't work. And you don't need a guru, and you don't need a stock tipper, and you don't need anyone telling you anything. All you need to do is look at a chart and say, do I have a setup? Yes or no? So what is in the system building masterclass? It's over 10 hours of videos. So it's 10 times, if you've bought the price action masterclass, it's 10 times the content, more than that. So we've got spreadsheets to help with every aspect of it. We've got spreadsheets to help with scatter plot testing, edge testing, back testing. We've got spreadsheets for Crazy Ivan. We've got the spreadsheet you saw today, and we've got similar spreadsheets. So these spreadsheets are really going to these spreadsheets are really going to they're nothing short of transformative. When you trade with good spreadsheets, life becomes so easy, and I hope you saw that today. So what else have we got? We've got done for you systems to use as examples or inspirations. So my experience is that I went and started working with Van Tharp because I'd done all these systems with this guy, Ivan Krastens, and because I'd worked with him, the only sort of systems I could think of in my head were his systems. So what I needed to do was go and make contact with other traders who had good systems and then use that as an example and inspiration. So what we have is the most common. My favorite part of the system building masterclass is we do these deep dive hour-long videos on the most popular system types. So we've got a video on everything that you could possibly need to know about trend following, and the same with mean reversion and stock mean reversion. I've got a video some of you have seen on working up volatility breakout systems, on momentum systems, on pattern-based systems. So once you decide what sort of system to build, we've gone in very, very deep detail for that exact system. Okay, so we've got complete done-for-you systems you can adapt for your own purposes or trade as is. I'm just going to be back in 30 seconds, guys. I'm just going to go to the bathroom. One sec. Hey guys, sorry about that. Okay, I'm back. drink a little too much coffee in the morning. It makes me need to go to the toilet. All right, so we've got complete done for you systems you can adapt for your own purposes or trade as is. So the first one is the system that the first system that I automated, and it's the system that I cut my teeth on. Really, it's called the Crazy Ivan. It's a patent-based FX system. Now, it's got some pros and cons. Its pros is it's an edge, and it's a thin edge, but it's still an edge, and it's 100% mechanical. There's absolutely no discretion on it. And the advantage of this system is that it's an incredible. It's difficult to execute. It's far more difficult than Thor. But if you can execute it, all the traders that I know, and there's a few of us here who cut our teeth on this system, they become outstanding traders. So Daniel, and I know Rita is probably here. This system will teach you to trade better than pretty much anything I could possibly imagine. So I've got some modified versions of Crazy Ivan for different situations, and I've got a video on ways of adapting it to make it from a thin edge into a very strong edge, because there's certain market situations where this system just kicks it out of the park. Okay, so we've got some stock mean reversion systems. We've got we call it the mean reversion cookbook. We've got a portfolio rebalancing system. There's a basic momentum system, which is Klenov's momentum system, which is really quite good. It's as good as more complicated things. We have a slot in bear market system, which is excellent, actually. So I made contact with this hedge fund guy who works for a real hedge fund, and real hedge funds do what they call long short. So they have guys doing a long portfolio and they have guys doing a short portfolio. And this guy is the system-based trader for the short portfolio of a very big multi-billion-dollar and the highest performing hedge fund in Japan. And he showed me his systems. I showed him mine. We got to be really good friends. He came and stayed with me for a couple of days. And anyway, he showed me what his hedge fund uses for shorting stocks, and I adapted that to stock indexes. It's the same system, but and I use it as a slot-in bear market system because we're in a situation where we've got a 9-year bull market in stocks. At some point, you're going to have to stop trading stocks. While the music's playing, you got to get up and dance. I mean, we should all be long stocks right now, but at some point that's going to change. So what we have for you is this slot in bear market system that when the market changes, you'll know exactly when to stop trading long and when to plug in this bear market system. Now, the bear market system doesn't take many trades. It takes a very small position size. It's only designed to make you 15% in a year while the market crashes, but making 15% while everyone else is down 50% is sweet like chocolate. You know what I mean? Okay, so we have a mean reversion cookbook for you where you match entry, exit, and universe and then back test. Okay, so here's what you're going to get. So you're going to get lifetime access to the system building masterclass, and that's a $2,000 value. And if all this did was it finally let you get some financial reward for the thousands of hours you've already spent. And I know you've all spent thousands of hours, because there are no guys here who don't know how to trade. Like, I speak to nearly everyone, and you guys all know what you're doing. If you finally got some financial reward, would that be worth it? If it cut your trading day down to 20 minutes a day like mine, would that be worth it? If it finally let you stop using other people's setups and systems and settle down with one system and just stick with it and just grind it out like a pro, would that be worth it? If all this did was let you make the jump from hobby trader to straight face saying, I make my living from trading the financial markets, would that be worth it for you? And if it stopped you from the literally inevitable disaster that happens when you try to learn to trade doing the hardest type of trading there is, that is trading with no system, would that be worth it? Because if you've had failure experiences in trading, and I had failure experiences in trading, the reason wasn't because I sucked at trading. The reason was just because I was trying to do the hardest type of trading first. That the discretionary trading is the realms of Paul Tudor Jones and those type of guys. Like, I can do it for a short period of time, but can I do it consistently year after year? No way. So if this allowed you to compound your small account into something meaningful that you could earn your living off, would that be worth it? Okay, but Thanks for coming on the edge, man. But that's not all. So I'm going to give you some other stuff. So you've got the lifetime access to the system building masterclass for $2,000 value. We're giving you the essential spreadsheets from Daniel, who's a much better spreadsheet guy than me. I suck at spreadsheets. It's $499 value. And I want you all to think about how having spreadsheets to do the heavy lifting, it drastically reduces the scope for mistakes, and it instantly makes you a much better trader. So when we first started trading Thor, we had an original version of the spreadsheets, which were not bad, but when we put a lot of automation into the spreadsheet, the mistake rate dropped by 76%. So I didn't become a 76% better trader, but I look like a 76% better trader because I started using a better spreadsheet. Okay, so here's what you're going to get. You're going to get the lifetime access to the System Building Masterclass, $2,000 value. You're going to get the spreadsheets, $499 value. You're going to get the Crazy Ivan complete system with the real-world results, not some backtest bullshit that you never know how it actually works. You're going to see the actual results, the spreadsheet, and yes, the spreadsheets are Google Docs. Personally, I prefer Google Docs to Excel because there's nothing complicated enough in daily execution that you're going to need for Excel. If you're doing some sort of back testing, and I use other things for back testing, maybe Excel might be better. So I actually paid $13,000 for the Crazy Ivan system. So did Rita, so did Daniel. If all this did was kick your ass into gear and finally make you build a system of your own, like you've probably been thinking about forever, would this be worth it? So here's what you're going to get. You're going to get the lifetime access to the System Building Masterclass, $2,000 value. You're going to get the essential spreadsheets from Daniel, $499 value. You're going to get the Crazy Ivan complete system, the real-world results, the spreadsheets, the instructional videos of me executing, $13,000 value, and you're going to get the Protect R plugin exit methodology. Now, this is really cool. So Protect R is an exit methodology that you can plug into any system, and it works best on pattern-based edges, the ones like Val, for example, who I know is here, uses, or very marginal edges. If you've got an edge which is an edge, but it's kind of a meh edge, you can plug in Protect R into it, and it will generally improve it enough to the point where it's going to be tradable. And yeah, it's a fantastic. Protect R is fantastic. It's a lifesaver if your entry setups are only average and not outstanding. So if all this did was save you from months or years of dead ends and blind alleys and problems that you have to fix up later, would that be worth it? Okay, so here's what you're going to get. You're going to get the lifetime access to the System Building Masterclass, $2,000 value. You're going to get spreadsheets from Daniel. You're going to get the Crazy Ivan system, $13,000 value. You're going to get the Protect R, which is $1,000 value. You're going to get the slot in bear market system, and it's the current short-selling production system from the all-time champion hedge fund in Japan. It's a great system. If all this did was allow you to stop trading your stock picking systems and slot in a bear market system when the bull market ended to let you make money while the others are bleeding, would that be worth it? Okay, so here's everything that you're going to get: $2,000 value, $499 value, $13 value, $1,000 value, $3,000 value. So it would cost thousands of dollars to learn this privately from me, even if I'm available, which I'm not. And to learn it by trial and error could easily wipe out your trading account, and it would certainly run into tens of thousands of dollars. And there's other courses available, and I've done some of them, and most of them, there's an opportunity cost of investing in crappy courses that just get you past beginner level, where you have to still do the work, or wasting years going down blind alleys and dead ends like I did. So here's what you're going to get: the lifetime access to the System Building Masterclass, $2,000 value. The essential spreadsheets, $499. The Crazy Ivan system, $13,000 value. The Protect R, $1,000 value. I feel pretty stupid now. The slot in bear market system value, $3,000. You're going to get the total value, $19,499. Now, I'm sure you can see that I could charge 20 grand for this, and especially considering Van Tharp's course, which is less detailed and only works on discretionary systems, costs $60,000 US. But I'm not going to charge you that because I'm not a dick. And I'm not even going to charge you I'm not even going to charge you $2,000. I'm not even going to charge you $1,999 or even $999 because you guys have been with me. As my gift to you, allow me to present my never to be repeated launch price. Hey, Daniel, did I Did I get the URL wrong on the PowerPoint? Okay, so the total value is 19,499. I think this URL is wrong. Don't go here. Go to the URL is the URL is something. 1 second, guys. I've got the URL wrong like a dick. Okay. Let me just check that URL. Okay, so that URL is wrong. Let me just fix it quickly. 1 second, guys. Okay. Okay, that's better. So as my gift to you, allow me to present my never to be repeated launch price. And yeah, I just want to give you a really good deal. $499 for everything. Okay, so I know I could have charged a lot for this. I know some of you were expecting it to be $2,000. I just want to give everyone a really good deal. It's knowledge I already have. Honestly, it's a screaming deal. Okay, $499 for everything. You get this lifetime access to the masterclass. You get the essential spreadsheets. You get the complete Crazy Ivan system. You get the Protectar exit methodology. You get the slot in bear market system. It's $19,499 value, and you can go to scottphillipstrading.com/system-sales. And I don't know anyone who trades less than $500 R values. You're going to make this back on the very first trade. So, can I help you actually kickstart your journey? And can I get involved with your project? So I love helping serious people achieve their trading dreams. I've helped a bunch of people build systems. I really enjoy doing it. I can honestly save you a heap of time. Just without spending a lot of my time, I can just nudge you in the right direction or stop you from going down a dead end. And I love being involved in the creative process. If you join today, or during the launch over the next week, we're going to switch it off in a week, by the way. You have to buy in the next week. If you join during the launch, I'll give you 2 months free. And usually I charge $99 a month of unlimited assistance from Daniel and I. And unlimited assistance means what it says. It means you get my cell phone number, you get my Skype, you get my GChat, you can add me on Facebook. So you're going to come. So we're going to have a little conversation. We're going to say, okay, we're going to work out what sort of system you're going to build. You're going to go away and try and find an entry setup. I'm going to help you scatter plot test it and back test it, and I'm not going to do the work for you, but I'm going to tell you exactly what to do, and I'm going to tell you if you're messing up, if you're going down an alleyway that's not going to work. I'm going to tell you if you're trying to test an edge that's probably not going to work. And at this point, I want to sing and talk a little bit about Daniel. He's actually, it could be a better execution trader than me. In fact, he is a better execution trader than me because he's done more of it now, because he traded this short-term system where he took like 30 trades a day, and he got really, really good at execution, taking 30 trades a day. You know, I'm taking 1 or 2, he's taking 30, he's crushing it. And his spreadsheet knowledge is just so tight. It's really, really good. And in execution, Daniel consistently outperforms me when we trade discretionary systems head to head. He's we have a little bit of a rivalry going, but he's slightly better than me, and I have to admit it. So after the order form is complete, you're going to be offered 2 free months, and you just click yes, and you can cancel at any time. If you don't cancel, I charge you $99 a month after, but there's no penalties, there's no sneakiness, there's no bullshit with that. I'm just here to help. Okay, so do you need more incentive to join right now? So as my gift to you, I'll be sending you a copy of the exact rules for the entry technique. And the first 10 people to buy today are going to get the rest of the system. So the rest of the system is the exit rules, the trailing stops, the position sizing. You get my spreadsheets anyway, so don't worry about that. And everything you need, that'll get you everything you need to be trading this system that you've seen today, everything. Like the spreadsheets, everything. You can just turn it on tomorrow, do half an hour work to get it going, you'll be up and running. So that's $3,000 value, and the first 10 people to buy are going to get the exits as well. So there's no way for me to give the personalized service that is going to be necessary here. Like I have to have at least a brief Skype conversation with everyone. I don't want anyone messing up, right? So this intake, there's only 100 people, there's only 100 places, and when they're gone, we're going to close the cart. Or in 1 week today, if we haven't sold 100, we're going to close the cart at least for a while until we've sorted through getting everyone sorted, until we've got everyone on the same page and working towards building their systems. I can't reopen it again, and when it reopens, the price is not going to be the same because it's really cheap for what it is, and the bonuses aren't going to be the same either. So this is the URL to buy, and I'm not shitting you. This isn't some false scarcity stuff. And before we go, I'd like you to imagine how your life is going to change a year from now. So after you build your own trading system, or after you start trading one of mine, you're going to have a full year of totally professional trading under your belt. So in a year's time, you're not going to care about what the market does tomorrow. You won't be reading the Wall Street Journal. You won't be reloading Zero Hedge. Your total focus is going to be on trading correctly. And how is this going to ripple out into the rest of your life? Your wife is going to like you better. You're going to be calmer. You're going to be happier. You're going to be comfortable when people ask you for market opinions. You're going to go, I don't know, I just trade my systems. You're going to be doing a fraction, and I mean a real fraction of the work, while you're making more money. And this life is sustainable. It's like, it really is sustainable. You know, I've been doing it for a number of years now, and it gets easier. It doesn't get harder. And it's for you. So I honestly, I really think that almost everyone that I've ever met in the trading world could benefit from your system, for this system building course. And I want to thank you for your time today. I really think it's a fantastic course. I put my heart and soul into it. Both Daniel and I agree that we wish, if this was available for me a couple of years ago, I would have bought it for $2,000, no question at all. It's priced at an amazing launch price, and you should buy it. Okay, thank you so much for your time today, guys. I'm really pleased with how it's gone. Thank you so much. Okay, I'm going to stop the broadcast now. If there's any questions, ask them in the chat or email me, and we can go from there. Okay, guys, get and buy it.